Bore you guys too much, but hi, I'm Graham. I'm from Sygnum Bank. I'm a product manager at Sygnum Bank, and maybe just quickly before I go into my presentation about why banking or we're going permissionless DeFi, we're a fully regulated digital asset bank in Switzerland. So we have a FINMA license. We offer end-to-end banking service for crypto assets as well as traditional fiat currencies. And on top of that as well, some additional other products such as ETH2 staking and tokenization platforms. So we're a bank that pretty much offers end-to-end banking services for professional investors, foundations, and I guess some real degens across the space as well. But today I'm going to be talking about a bit of a history lesson to start off with, and about a bit of a history about banking. Is that, like, for the last 30 years, banking's been digital. And banks have all relied on these internal financial systems to keep track of information, balances. It's all database driven. It's all through these core banking systems. And what we sometimes forget in the crypto space when we look at what we're building is that these current systems that we have today in banking is that they're just really incredibly expensive. And somebody mentioned in a talk yesterday is that to run, maintain, innovate around these systems is incredibly expensive for a bank. And here's a good example of what a core banking system looks, and it's all powered by a nice UI today with a really strong server somewhere in the cloud. And banking's not always been like this, maybe, that we've experienced, but here's a really good example of like the first, what they refer to as banking computer. It's a Bull Gamma 3. And this is how they started like calculating balances in the early 60s. And here's I don't know how true the picture was, but like the server room at Credit Suisse where somebody's also keeping track of all the ledgers in Credit Suisse. And that's the first credit card that MasterCard issued, and here we have like a share certificate. And what's really too important to note here is that banking has evolved over time as technologies evolved with it. So we have new innovative technologies that come up, and it powers new forms of banking that we have today. And maybe we're all very familiar with like Revolut today, an amazing online service, and then the banking services that you have like from your everyday bank. It's really digital, very powered through this digital technology. But it's changed a lot since we first, let's say, started banking 30, 40, 50 years ago. And accessing financial services today is very limited. So, everything sits behind this application layer. I've used the Swiss examples from Switzerland, but SIX is the Swiss Stock Exchange. SWIFT is the global payment network, and Finastra is like a loan system. But the biggest value generation happens in this bottom layer here, but it's all closed. It's all behind these closed doors, and only banks or some financial institutions have access to these things. So you sitting here, actually, unless you're working at a bank or a financial institution, have zero access to these services that are available. And that really sucks, right? Like, the access to these applications is all limited to customers of the bank. And, to be a customer of a bank, we all have bank accounts. You need to reside somewhere. You need to meet certain criteria. Like, it's very limiting. And so to access these products and services are incredibly limiting. And then on the application and, let's say, data layer, is that the innovation cycle is incredibly slow. We know how slow banks are. They're just very innovating in the space is very difficult. We have really high fees to pass on to the customer. You have a lack of transparency behind the application and data layer. So you, as a customer of a bank, you actually don't know what's going on, or how your data is stored, or how your transactions are monitored or put into the system. And these layers, because they're behind this like closed layer that no one can see, you have to rely on trusted intermediaries. That's why we have auditors. That's why like Deloitte exists today, because of the fact that banks and intermediaries and these regulated institutions have these closed systems that need to make sure they're operating correctly. And that's the same reason for regulators and central banks. And this is what we see as the limiting, let's say, overall arching of banking today. And then we go back, right? Like, banking and money has evolved as technology's evolved, and we believe now that we're in this new technology and banking age, money age, with introduction of like decentralized systems. And a really good example here that I'll talk to is like Ethereum, right? Like Ethereum, your data layer is open, and we have like a wallet that's on your phone, and you can do a swap here, or you can use MetaMask. Like, the technology has evolved. It's a new form of technology. And so we believe that decentralized finance is the next revolution in finance today. And I mean, maybe some of you guys don't know like what DeFi is. We can always discuss later, but like we see as DeFi as this like open and global financial system that's built for the new internet age that we have today. And it opens up products to anybody with an internet connection. Like anybody here, if you want to go do a Uniswap trade now, you can. Or if you want to go deposit some money onto Aave, you can. It's like there's no limitation. And they're largely owned and maintained by the users. So there have been some talks about DAOs today, but really the token holders are the real owners and the value, like the owners of this capital or these applications. What I think is the most innovating piece, and I talk about it a bit later, is that banks can rather integrate rather than have to buy or build. So one of the biggest things banks today, if they need a loan system, they have to buy one, right? Or they have to build one. But today, you don't need to do that. With the like decentralized finances, you're able just to integrate into this Web3 ecosystem. And so that means focus will be really beyond being a trusted service provider with these services. And so when we look at the future of banking, we're really moving from these centralized systems, and we can see here like a NASDAQ moving towards potentially using a Uniswap or Curve or 1inch. Or then even like your savings account is going to be powered by Aave, Compound, or StakeDAO. And you really can go into more complex things like structured products, financial structured products that your banks offer you today, Convex, Ribbon, OpenSea. Like really the future of banking is going to be really service driven by integrating as many of these services as possible, but still offering that banking experience. So we're convicted that the space is here to stay, the DeFi space, and we're sure it's going to grow. It's grown crazy over the past couple of, let's say, 2 years. It's going to continue to grow, and adoption will grow. We do think that there will be increased regulator scrutiny. I mean, we're seeing that today, and unfortunately, like let's say the events over the last 2-3 weeks with Terra is going to increase that regulator scrutiny. Maybe one that some people disagree with, but we do definitely see that DeFi will coexist with traditional finance as well as decentralized finance. So like there will be this merge between these two worlds, and we believe that they both will coexist next to each other. But it will displace like centralized finance in some areas, and maybe it goes to the point that I made earlier, is that you will have some areas in the space where you're going to see that like potentially a savings account will be like a money market powered by Aave or Compound. Like there will be some, let's say, innovation disruption there. And I guess there was a workshop on this, but you know, user experience today in Web3 is really not great. I think we're all familiar with it. We all have to set up a MetaMask wallet. We all have to store the seed phrase somewhere. And for the mass adoption side of that, is that that's just not a really great experience. And again, controversial topic to raise, but you know, that's where banks today provide a really essential piece of security in that world, about providing ease access to your money. And so with the proliferation of DeFi applications, clients are really looking for a trusted partner, especially in our world. Like clients are wanting to enter into the space, but they need somebody who they can trust and do some due diligence around it without them having to fully go into this risk themselves and try and make sense of what is a good DeFi application, like what criteria to look at. And so like there really are, I mean, maybe everyone in the room here, we're all DJs maybe, for instance, who won't use the service, but there's a really big market out there that are looking to enter into the space, but they really need some help there, and we can really provide that. And so where we sort of see this like simplifying and like infusing the DeFi journey, and maybe like I won't, let's say, go too much in the top part, but that this is really like the top part that you have to go through as a DeFi user today, where you have to like do your personal research. There's no, let's say, requirement to do any AML today. You need to get your, let's say, dollars or euros or Swiss francs into crypto in some form, so you have to use an on-ramp. Then you have to interact with a protocol through MetaMask or your ledger. You'll have to choose on the service, and then you'll use your custody rights, maybe using your ledger for custody. And then like there's no reporting. You just get money just goes up, right? Your inflation, just new money is created, and you have no form of reporting. And so where we see the value that we can bring as in the DeFi space to our clients is, we're able to do some due diligence beforehand in terms of where we think the good protocols are. We're able to adhere to also give some AML regulatory security to some clients. We provide the fiat on-ramp. we'll do the protocol interaction, the protocol service. We have secure custody for our clients, and we do tax reporting and statement reporting for our clients who'd want it. And so, we're really trying to bring in being able to use the power of decentralized finance for our clients, but then provide the products and services that they are used to today in a normal banking interaction. But I mean, that last slide is all pretty and it's nice to say it, but it all comes with its challenges. And one of the biggest challenges is really the regulators are still trying to understand the ecosystem. And once they maybe go to get a grip on the ecosystem, it changes again. Or something like Terra Luna happens. And then for them, it's just the conversation just starts all over again. It becomes a whole new thing that they're trying to battle with. The other thing that we really struggle with is we have customers from all over the world, and how do you deal with each one of these with the different tax rulings with this new technology, and how do you apply it? And then again, like I mentioned, the central bank and the banking regulator, continuous conversations in terms of how we can offer this product and service for them to also understand and feel safe and secure that it's being done. Then one that I don't find that many people talk about very often when, let's say, banks are talking about crypto space is that integrating these blockchain systems, we don't call it anything, be it Ethereum or be it DeFi or NFTs, is that implementing into our internal old school banking systems are really challenging because they're not built for this new exciting world. So there's a lot of, I would say, plasters are put on to sort of make it work because the old world doesn't really fit with the new world, and you sort of have to bridge this gap, and that's always a challenge. Something I never expected to happen when I first joined Sygnum. So just to conclude, really what at Sygnum we're looking to do is bring this world of banking that we have today that is really seamless and digital, and integrate as much of this DeFi or decentralized world that we can to our clients. I mean, that's really about being a service-driven offering for our clients, to be able to offer them plugins, to be able to get access to these products and services through where we don't have to now go and build a loan system, a trade system, really just empowering them into this new age of internet money or technology. And and I know I've been, let's say, quite quick, but if you want to connect with me on Telegram or Twitter, feel free to scan, and then got some time for questions if anybody has any questions.
Thank you. So with investments, there is always a trade-off between risk and reward. So how do you said you do due diligence, but if you offer the customers only the most secure protocols, they are going to earn almost no yield, right? So how do you allow them to do risky stuff, or just stuff that's very low risk and very low reward?
Yeah, so right now the plan is initially low risk, low reward, right? Because I think as a bank with a license, you sort of have to go in for the low risk one. It's just also secures us for us to grow in that products and services in the future and provide these services as we go on and provide more risky services. But the biggest challenge is really educating the client in the initial phase, and then obviously as you offer more risky platforms, be able to then educate them in terms of what they're doing. But right now, just to get over the first line of the product and regulatory understanding, it's really go with a safe, secure one with potentially low yield. And you've got to remember, a lot of, let's say, the clients we might have are just holding these assets. They're not yield farming themselves, right? They're institutions, potential family offices, and so even maybe if it's Aave at 2%, it's still better than what they were getting beforehand, just holding it in their own custody or with us.
So great talk, thank you. So this is opinion, and also maybe asking for you to extend a bit. So I mean, I have the feeling that whenever we look into DeFi, TradFi differences, or it comes down to custody and non-custody, more or less. And there's obvious reasons why we invented custody, and I don't see a complete non-custodial feature for DeFi or crypto, I think. So how does your bank or your personal opinion is on this? Where it will go? And is there a, I don't know, like a guarantee for DeFi up to 100,000 euros or something like that? Or there any regulatory sides on this that are looking into future?
Yeah, so maybe I'll try and answer the first part. I think one of the the great features of DeFi in itself is that it is non-custodial. So I don't think you would want to take that away. I think just in terms of how that looks from a regulatory point of view, you'd rather have like the interaction with the contract, right? I don't think we as a bank would want to take on the custody for the risk. I think that's just maybe on the first half. Do you want to remind me of the second question?
Is there like a, I don't know, would there be a, like how you're doing the custody? I don't know, to expand a bit.
Yeah, so like,
how you look into that?
So we have our own secure custody that we've built internally, right? Mm-hmm. And then what we do is just enable the deposits and the transaction signing through a very robust like business rule engine that we have. And that allows us then to obviously sign a transaction and potentially deposit the funds into Aave. But Aave still technically hold the, it's non-custodial, right? So like the custody, the funds are now sitting within the Aave protocol.
So you allow interactions through your custody, so to
yeah,
speak.
Well, that's what we'll build, right?
Mm-hmm.
We'll build where we'll, let's say, control the client's experience.
Okay, yeah, thanks.
Cool.
Shall I shout?
Yeah, you can shout.
I just wanted to ask the question, will Sygnum work with other banks in the region to present the offer where they already have the post-KYC account customers, or will you make that infrastructure that you've built available under license?
So we offer a B2B business servicing. So if you're a bank and you're interested, feel free to come talk to me afterwards. But yeah, we do offer a B2B offering where our B2B clients get full access to the entire infrastructure that we have and custody and trading platform and core banking system. So yeah, we do offer that towards other banks who have that service. Cool, yeah. Cool. If there are no other questions, then thanks everyone for your time.